markets are fractal. You might have heard me say this before, but I will say it again. Markets are fractal. What does that mean? Well, before I answer that question, ask yourself, if you look at both of these charts, one of these charts is a 1 minute chart, one of these charts is a daily chart. If you had to guess yourself, which one would you go for? If you had to say that one of these charts is a 1 minute and one of these charts is a daily, which one would you say is the daily, which one would you say is the 1 minute? All right, I'll tell you. The one on the left-hand chart is actually a 1 minute, and the one on the right-hand chart is actually a daily. Often people get that wrong. They think the one on the right-hand side is a daily chart. But the point I'm trying to get to you is that by looking at price action on a chart, unless the market is completely illiquid, when we're trading liquid markets like Forex and major commodities or major indices, etc., there's a lot of liquidity there. So you can't tell the difference between a 1 minute chart and a monthly chart or a weekly chart if you just zoomed in on the chart. Reason being is that there aren't innate characteristics to each time frame. Each time frame is its own independent world, its own independent universe, which operates with the same laws, the same patterns, the same things. So if we can identify a pattern happening on the 1 minute, that pattern is just as valid as a pattern happening on the daily or the weekly or the 4 hour. So this means that if we can learn a mechanical strategy, a strategy that takes advantage of a particular type of pattern, which takes advantage of psychology, technical and manipulative characteristics in the market, then we can implement that across any trade on any time frame. We can take that trade on any time frame and expect a similar result because the ratios are all the same. You might be taking a trade for 10 pips on a 1 minute chart, or you're taking a trade for 400 pips on a daily chart. But again, the ratios are the same. If you're risking based on percentages, you say I'm risking 1% on that trade, then we can make the same risk to reward. So this is the power of having a strategy that enables you to do that, enables you to be able to execute trades on any time frame and in a way which allows you to identify that trade in a quick and easy way. And that's what we're talking about with the corrective strategy. It enables you to do that. Many times I'll take a trade on a 5 minute or a 15 minute chart. If it's looking clean and nice, I'll take it. If it's even a 1 minute chart. Those are some of the nicest trades, to be honest, because I can make my 2, 3, 4, 5% or whatever it is in minutes. And then I can effectively say, okay, I'm done for today. Or I just increase my overall profit for the day. Whereas when I'm taking trades on the 4 hour, I still take trades on the 4 hour, but I might have to make a couple of days to get paid for that. We're all different, we all have different mindsets, and we're all suited for different types of trading. So I'm not saying any sort of form of trading is better, but it's nice to have a strategy that gives you the opportunity to execute on whatever sort of time frame you want. And obviously, the lower the time frame you go, the more opportunities you may find. So this is the power of fractal markets. The same things happen on every time frame. You can even look at classic technical things like a break and a retest of a level, break and a retest of a chart level, and support and resistance working. The same sort of patterns happen over and over again. That's something to think about when trading these markets. Is markets are fractal, so don't worry too much about this multi-time frame analysis approach, which is the typical thing again, which retail traders learn. Do your analysis on the daily, 4 hour, hourly. Yeah, I get it. It has its place in some types of trading or investing. But again, we're looking for a statistical edge which we can execute in the market consistently and generate a return.